This is how I shaved 10 years off my mortgage, and if you don't believe me, here is proof of it right here. This is my mortgage on one of my loans, and simply all I did was increase my mortgage repayments by $38 per week. And a little bit backstory here is that originally when I took out this mortgage was on a 30-year loan term, and then I did a restructure in June 2024, and you can see that it finishes in July 2044, and my fortnightly mortgage repayments is $700, and that's how I maintained that when I did the restructure. So I'll quickly go through the numbers and explain how this works. Let's go ahead and plug in our numbers, and our mortgage is $199,000. The original loan term was 30 years, 3 years has passed, and so 27 years. And when I did the restructure, that was June 2024, so our interest rate is at 6.85%, and you can see that our minimum monthly mortgage repayments is $1,352. Let's convert our $700 fortnightly repayments to monthly repayments, which is $1,516. Subtracting our minimum repayments shows that an extra $164 will go towards the principal, and if we convert this back to weekly repayments, then it's $38. Now we're going to plug in that extra additional repayment, which is $164. Well, I'm going to change it to 165 because it was 164.8. And you can see that by doing so, we will pay off our loan in 20 years. So shaving 10 years off our mortgage, which is reflective at the beginning of the video in that screenshot I showed you. And you can see that by month 7, $196,000, which is roughly where I am at the moment. Here's an extra clip if you like numbers. So let's assume that interest rates continue to go down and 1 year has passed. And I'm going to take the 1 year rate as of today because I don't know what's going to happen in June 2025. The 1 year rate is 5.59%. I'm going to change that to June 2025. And the extra monthly repayments is actually about $303 because obviously I'm going down from 685 to 5.59. I will now pay off my mortgage in 17 years, so saving another 3 years. So one of the greatest tips out there is to keep your mortgage repayments the same if you are rolling off a high interest rate to a lower interest rate. As I was saying before, every dollar above that does go towards reducing your principal amount. Now, if you're not coming off a high interest rate, then increasing it by even let's say $5 per week or $10 per week, it does compound and add up, reducing your overall interest being paid to the bank and therefore shortening your loan term. And if you're new to my page, I'm your financial engineer. I'm all about mortgages and personal finance tips. So if you want to learn more, be sure to follow and like.